What is up, YouTube? I'm Adam Odell, Chief Investment Strategist at moneymarkets.com. I'm normally joined by my research analyst, Matt Clark, but this week we have a very special guest, Ian King, who is my personal crypto expert. So Ian has a lot of interesting things to talk about related to the crypto space, and I was lucky to get him on this week to share him with you. So thanks for taking the time with us this week, Ian.
Adam, thanks for having me. I'm excited. I don't know if I'm an ample replacement for Matt, but I'll do my best.
I think you'll do just fine, especially in the crypto space. And I've got a lot of questions I'm interested in getting answered from you. So I want folks to know a little bit about your background. But first, just to kick things off today, I've got 5 or 6 questions that are kind of burning questions. And I'm going to kind of do a lightning round with you if you're game for it. I'm going to ask you some tough questions, and hopefully you can give me either a yes or no answer to the question. And if there's some nuance, we'll kind of circle back and talk about those in more detail. But are you game for that?
Let's do it.
All right, sounds good. So the first burning question, I read yesterday in Bloomberg that Miami, the new capital of crypto, and they're having a Bitcoin 2022 conference now. So I heard that they have a 3,000 pound Miami crypto bull that is kind of fashioned after the one on Wall Street. But this one has laser eyes. So first question is, have you seen the crypto bull? And the follow-up question is, do you think that Mayor Francis Suarez will be caught riding the bull and have a photo op?
I have seen the bull. It's kind of like a cybernetic bull compared to the one that they have down on Wall Street, which is actually on Broadway, by the way. I think that, he could be excited enough this weekend to probably make his way to on top of that bull at some point. I'll be down there tonight, so I'll look out for him.
Oh, great. Well, I'd love to hear how you think of the conference. But yeah, I know that Francis Suarez is a pretty big crypto bull, so I wouldn't be surprised to see him on the bull as well. So. All right. So second question, is Coinbase a better buy than Robinhood if somebody's looking to invest in a stock with exposure to crypto?
Absolutely. 100%. No question.
Right. Unequivocal yes there. Wonderful. So third question, is it true that less than 1% of the US population currently owns crypto?
Yes, if you consider every person in the United States.
Gotcha. Okay. So that's a very large runway for adoption is what I hear there. Wonderful. Fourth question, is Bitcoin mining really boiling the ocean?
It's using a lot of energy, and that's why. So I wouldn't say it's boiling the ocean, but it is using, the network uses about the same amount of energy that the entire country of Norway uses in 1 year. So, but there are fixes for that, and there are other protocols coming out that I'm excited to talk about.
All right. Well, that was more than a yes or no answer, but we'll circle back to that because I'm interested in hearing about those fixes because I know that you and I are both proponents of renewable energy and environmentalism. So we'll get into that. So fifth question, will blockchain really be able to disrupt Visa?
Yes, not only Visa, but I think the entire financial infrastructure is going to be rewritten in the next decade.
Gotcha. That's what I was getting at. And Visa is obviously the linchpin of that, of the old traditional finance payment system. So wonderful. And then the last question, is it going to be a boring summer for crypto?
It's never a boring time for crypto. There's so much development happening, so much going on. So I would say no way is it going to be boring.
All right, that was an easy leading question, so yeah. I'll leave you with that one. And I'm anxious to hear more about what you think is going to be happening this summer and how investors can get in on the action. But I want to take a step back and let folks know a little bit more about your background. I mean, you've been in traditional finance and investments in the markets for quite a while. So how did you get into traditional finance, and what were some of the things you did in your prior career?
Yeah, I started out, 25 years ago at Salomon Brothers in fixed income trading. I was basically like a desk clerk that would just check out, orders. And basically back then, Salomon was a meritocracy. I worked my way up. I hustled. I got to work early, stayed late. And then, after a couple of years, I was promoted to junior trader analyst, wound up leaving because I felt like I needed to take more risk in my life and just became a prop trader on Wall Street, trading equities. Then eventually went on to start a little hedge fund that did really well, enough for me to take some time away from the markets after the financial crisis. And I started doing venture investing. So I was looking at basically early stage companies, and new innovative technologies. My focus back then was on electric vehicles and renewable energy. And then Bitcoin came around about 2011. And, my history with cryptocurrencies, I was very skeptical about Bitcoin at first because it was kind of like the libertarians' digital currency, right? So a lot of gold bugs were into Bitcoin back then, and I didn't think it really had as much real world staying power, given the time that we're in. But it wasn't until Ethereum came around in 2014 that my interest was really peaked in cryptocurrencies, because with Ethereum, you had a cryptocurrency, a currency that was programmable. So this is going to allow for all types of autonomous smart contracts. And I think that's what we're seeing right now in the crypto markets. The big idea really is being able to program something of digital value that can sort of work on its own. And we can talk more about that and my thoughts on that if you want. But I'll leave it at that. That's how I got
absolutely.
Into crypto,
so I mean, it sounds to me that when you say programmable, it's almost that Ethereum is more a software ecosystem more than it is a strict currency. Would you say that's fair?
Yeah. So think about it this way: Bitcoin is digital gold, right? And Ethereum is basically a new way to power the internet and digital services. Now, would you rather own all the gold in the world or actually own the internet? And for me, I think owning the internet and all digital services is going to be much more valuable than owning gold, which is why I think Ethereum and other layer one protocols that allow for smart contracts is the better bet in the crypto markets.
That's interesting, because I know a lot of folks that have maybe a cursory understanding of crypto see Bitcoin and Ethereum as one and the same. And the theory behind Bitcoin is that the scarcity, the fact that there's a set number of Bitcoin that currently exists and will exist in the future, that scarcity in a currency arena means that the value can't get devalued the same way that fiat currency can. But it sounds like on the other side of the spectrum, you have Ethereum, which is expandable. It's not necessarily a scarcity play, but it's the expandability of the ecosystem. So really, it's really about adoption and how many developers start to build on the Ethereum platform. Would you say that's right?
Yeah, it is. But if you look at currencies that are naturally deflationary have not worked as well, because you want something that actually grows with the economy. Like fiat currencies have worked so far because they've been able to expand as the economy grows. And I think when you see the market for digital services that are decentralized continue to grow, you want something that expands. Now, you don't want something that expands too much, and you don't want a centralized sort of structure where there's like a central bank that's just printing them whenever things go wrong. And that's not how a lot of these protocols are set up. And I also want to make the point that not every cryptocurrency is expansionary. A lot of them have hard caps at certain supplies. It's just that many of them probably have maybe 60% of the issuance out so far, and you've got another 40% coming. You brought up Bitcoin. So Bitcoin has a total supply cap of 21 million. There's about 19 million in circulation right now. So between now and I think 2150, they'll still be issuing Bitcoin on a daily basis. It's just that the number of Bitcoin is getting reduced over time in terms of the block rewards for the miners.
Interesting. Okay. So back to Ethereum. It sounds like that's very much an evolving protocol. And I asked you a tough yes or no question: is Bitcoin mining, or what we know as proof of work, where miners actually run the algorithms on their machines, and those machines take electricity. And a lot of folks in the ESG community or otherwise are worried about the consumption of energy. And so what's happening with Ethereum as far as its kind of shift away from proof of work?
Okay, so it's a great question. And I think we need to kind of dial it back and think about what is the role of a traditional bank, like your bank, my bank. You make a credit card purchase or something to the bank is there to ensure that you have the money there. And when you go to pay for something digitally, the vendor or the merchant communicates to your bank, and the bank says, yes, Adam has the $5 on his credit card to buy the Starbucks coffee. Now, Bitcoin changed this all around with what's known as, you said, a consensus mechanism. Basically, it is a network of computers that will validate transactions and approve them because the network knows who owns what in the system. They don't know that you own something specifically. They know that your pseudonymous wallet address does. And in doing this, it requires a network of computers that are crunching, an algorithm, that are trying to solve a puzzle. And in doing so, they're going to win the block reward. And they also have to agree with over 51% of the other miners. That is very energy intensive. This whole proof of work schematic that was invented by Satoshi Nakamoto in the original white paper. There are different consensus algorithms that have come about. One is proof of stake with Ethereum. Another one is proof of history with Solana. Avalanche has a totally different consensus algorithm. EOS has delegated proof of stake. So these computer scientists have been coming up with new ideas to create a system where a distributed network of computers can validate transactions and agree on who owns what when you go to make a transaction. The hard part, though, is doing this at scale, because in order for you to do a Bitcoin transaction, you have to have 51% of the miners that are out there all over the world have to agree on this. And that's why sometimes, it can take 10 minutes to even an hour when the Bitcoin network is busy to actually use it as a form of currency. The big news in Ethereum that's happening this summer, and this is very important for everybody to understand, is that the Ethereum network is moving from this slow, proof of work concept, which requires lots of computers, to proof of stake. And the consensus algorithm is different. You don't need to be a miner to validate the network. You don't need a computer. You just have to own a certain amount of Ethereum and actually stake those assets. And in doing so, what the algorithm does, it basically chooses a random person, a bunch of random, individuals that have staked. And as long as 51% of those random participants agree on the latest transactions, then those will be valid. So this is a totally different, revolutionary new way to create a network where these decentralized computers can come to an agreement or a consensus on things that happen within their network over a certain period of time. It's very exciting. It's one of the reasons why most analysts, myself included, are extremely bullish on Ethereum going into the merge this summer.
Okay, so if I understand you correctly, Bitcoin mining or proof of work actually requires, like if I wanted to get into it myself, I'd have to go out and buy some very expensive computer equipment and figure out how to hook it up to the network and actually pay for the electricity, which can be expensive. But you're saying that the proof of stake with Ethereum, basically, as long as I own Ethereum, I can stake that Ethereum, basically lock it up in a protocol that shows that I'm willing to verify these transactions, and I can actually earn rewards just by owning Ethereum. Is that right?
Correct. And we're looking at like 10 to 15% annual returns on staking Ethereum right now.
That's what I was going to ask. So if I think about this as a yield, either a dividend paying stock or a bond where yields are basically nothing. I mean, they've been going up recently, but so you're talking 10 to 15% annual yield by staking Ethereum?
That is what there's a testnet version going on right now of what Ethereum is eventually going to become. And the early users are seeing 10 to 15%. Now, the numbers might change when you start flooding this market. Only about 10% of Ethereum right now is currently staked in the testnet. And then in June, what's going to happen is the existing proof of work chain is going to merge with this testnet chain, and that will migrate it to proof of stake from proof of work right now.
Gotcha. Okay. And this is all happening this summer. Now, I've read some, not skepticism, but concerns that when this switchover happens, when the merge happens, that the network might be more vulnerable to hacking because a lot of the miners might kind of close up shop early and try to sell their equipment, or just that there might be a fork in the chain where the people that still want to do mining with proof of work might make a fork of Ethereum. So if there's anybody worried about this merge, I mean, what's your sense of security over this event happening, and what should we be aware of?
Well, I mean, with technology, like things always take longer. There's always hiccups along the road. This is a brand new innovative technology that, is working on the absolute fringe of what we know and what we're capable of as a society in finance, in media. And so there definitely is going to be hiccups along the way. Now, Ethereum is not the only chain that does smart contracts. You've got Solana, you've got Avalanche, you've got Near, you've got Phantom, and all these chains have different consensus mechanisms and testing them out. And I kind of liken this to back in the days of, search, like when, I don't know if you remember, like 25 years ago when we had InfoSeek, we had AltaVista, we had, Go.com, Yahoo. And then eventually like one search engine, Google, just did things a little bit better and everybody started using Google. I think that it's different this time in that you're going to have, competing chains. So Ethereum will have their consensus mechanism one way, and it'll probably be good at certain things like decentralized finance. Solana has a different consensus mechanism. It might be better in let's say, NFTs. Phantom is really building out a robust DeFi offering right now. So I don't think that it's going to be sort of winner take all, but I think there's going to be a lot of competitive chains. Another reason for that is that people tend to buy one token that they believe in, then they start investing in the sort of infrastructure that's built on top of this layer one, and then they stick with it, right? And so there's not as much switching going on back and forth as there were back in the day when it's like, Google became a verb and everybody just migrated to, because their search just became so much better by everybody using it. I think that each chain will have different, pros and cons to it. So I don't think that Ethereum is sort of the end all be all in the crypto markets.
Gotcha. Okay, so I know you've said before that you think Ethereum is going to overtake Bitcoin, probably related to this merge. So that's exciting in and of itself. But what I hear you saying is the fact that less than 1% of the population owns crypto. There's a lot of runway for growth and expansion, and the mere fact that it's a decentralized system where it's not winner take all. I mean, that's music to my ears, because I know that there's a lot of targets on the backs of the big tech that the Googles and the Amazons right now that kind of control everything from a centralized point of view. So it sounds like this is a decade for the little investor that wants to diversify across not just the blue chip crypto assets, but also some of the more alternative coins and the smaller protocols that are growing. Would you say that's true?
Absolutely. And like, if you think about what crypto actually does, it enables a user and an owner of cryptocurrency to actually, earn rewards for participating and providing digital resources. Okay. So that can be anything from being in a liquidity pool, right? So you can be a market maker almost by staking coins in a liquidity pool on Uniswap or other decentralized exchanges, to actually providing cloud storage in a decentralized way. There's a company right now called Holoport that's shipping these devices that you connect to the network, and people will store files on your decentralized cloud instead of having one big database somewhere run by Amazon or Google, or Microsoft. We'll have computer in America will have idle storage space that will be used to actually allow other people to store files on. So that's another big idea. That's why I think that owning Ethereum and other protocols that allow for smart contracts is actually owning the internet, because I think in the next 10 years, we're going to see more people who have idle digital resources to offer. And that could be, like I said, cloud storage or network bandwidth, with protocols like Helium, could actually provide these resources, right? I mean, Helium, for instance, is just an incredible experiment that happened. They basically bootstrapped the largest telecom network in the world in a couple of years by incentivizing people to build out the infrastructure, right? You think about how AT&T and Verizon have to build out their 5G. They have to invest in 5G towers. What Helium did is they basically said, if you provide network coverage around your given location, we're going to pay you in Helium tokens. And any investor that wants to invest in part of the network can just buy the token and push the token price up. So they're looking at a $3 billion network that was just bootstrapped from cash. And that is an idea, a way that you can build a brand new technology from the ground up with users and not a centralized organization. I think we're going to see more of that. We saw that obviously on the hardware side, but you'll see more of that in the digital side with cloud storage and other, network bandwidth and computational power, which is basically what Ethereum is. And I don't want to be too much over people's heads on this. So if there's anything that I didn't explain, please let me know.
No, I think you're giving a great introduction. I mean,
Okay.
The Helium story to me is fascinating, because you mentioned AT&T and Verizon. I mean, these are capital intensive businesses to run those lines and to build those towers. And that's basically why they're more or less a monopoly or an oligopoly. So that's interesting. So, I mean, it's so crazy that, a small bootstrapped crypto, setup could basically grow to the size it is. And so basically what you're telling me is that this Web3 revolution is basically the little guy's chance to own a piece of what will become the next internet. And it's still in its infancy, right?
I mean, absolutely. Web3 is like sort of a catch-all term. It basically, the idea is that somebody who creates digital value will be compensated for that digital value. And that could be anything, like I said, from providing a digital resource to, someone who's creating music and wants to share that with their fans. They don't need a platform like Spotify or Apple's iTunes in between them and their fans. Obviously, a lot of people are happy about this, because there won't be that kind of censorship by big tech along the way. Maybe you agree with it or not. Maybe you just don't listen, to the music or the person that's putting out the content. But I'm excited that we actually are using the internet basically as a utility, rather than having some big corporate oligopoly run it themselves. And I'm not saying government utility. This is, utility that's going to be owned by the people, Web3. And I just think that this decade is going to bring up so much innovation in that we haven't seen before.
Yeah, no, it's truly fascinating, and I think the opportunity from an investor standpoint is just phenomenal. So let's say if I'm one of those 99% that doesn't own crypto right now, and I'm a total crypto newbie, what would you recommend as my first step to get into crypto? Either opening an account at a certain Coinbase or otherwise, or what would be the first crypto to buy, or where can subscriber or where can viewers today get more information from you? Because I know that some of these names that you've dropped, Solana, I know that you've gotten your subscribers into them early and made thousands of percents of gains. So where can they find more information from you on this inside track of crypto?
So we just put together a new report. Happy you asked. Obviously, you can sign up for a Coinbase account. The coins that we are highlighting in this new report are widely available. I didn't want to, do research on something that it wasn't for everyone to buy, because as you know, there are some coins that are only available in sort of hard to get places like decentralized exchanges. The easiest thing to do is open a Coinbase account, sign up for our newsletter, get the new report. I think it comes out next week, if I'm not mistaken. And so I think there's 5 total new ideas that we will be publishing next week. I'm excited to get those out there.
No, I appreciate that. And that reminds me of something we've talked before, is that you want to give it recommendations that everybody can get into. Because I know a lot of crypto is very specific. You have to go on some decentralized sites that are new and iffy, and NFTs are one of a kind. So I really appreciate that, you stand behind your recommendations and make sure that everyone that is interested in getting into it is able to. So I certainly appreciate that.
Yeah, but I would also add one other thing. So there is a little bit of an edge in doing a little, going a step further to find something that not everybody get to, right? These assets, I believe, have such a head start in their prospective, sector, that I think they are the key ones owned, the sort of the blue chips of crypto. And they're definitely not household names. I mean, most people have never heard of them. Most people have heard of Bitcoin, Ethereum, maybe Solana. These are ones that you've got a lot of venture money behind them. That money is making things happen. And, they're basically leaders in their categories. But then there are, those microchip and those like super small cap plays that are very hard to find. It's like kind of finding a needle in a haystack, but that's what we do. We just, comb through the markets and talk to people, go to conferences and figure out, what the next big idea is.
Yeah, no, I know you found a lot of really interesting ideas, and it sounds like they're in the sweet spot. So they're looking beyond Bitcoin and Ethereum, which everyone's heard about, but they're not the super speculative, tiny things, because there's a lot of rug pulls and a lot of fraud in the market right now as well. So I know that you stay away from that stuff as well. So, well, I'll make sure, Ian, thank you so much for joining the call this week. I will make sure our team puts links to where viewers can get that report in the next week or two, and we'll be sure to follow up with you later this summer when things really get heated with the Ethereum merge. How does that sound? Awesome, Adam. Thanks for having me. Absolutely. So, well, folks, we'll be back next week with our regular guest, Matt Clark, and thanks for tuning in to Ask Adam Anything. Have a great week. Talk to you soon.